K-State ag economist Terry Caston says he thinks land values will slow their meteoric rise. He's calling for prices to stay flat or fall 10% in 2014. Now, a recent Iowa land value survey from November shows farmland prices still making history, now estimated at $8,700 per acre. That's up 5% from last year. Tuesday's supply and demand report shows global wheat stocks are at a 2-year high. There's a much bigger crop in Canada and overseas. In today's Pro Farmer Profit Briefing, senior market analyst Brian Grady and digital managing editor Julianne Johnson look at the wheat fundamentals, both domestic and globally.
Well, earlier this week, Julianne, USDA unexpectedly raised its domestic wheat carryover number for the 2013-14 marketing year. And I say unexpectedly because traders were anticipating a slight decrease. But when you look at the number, it's still the smallest carryover number that we've had here in the United States since the 2007-2008 marketing year. And yet, we've got prices that had a negative reaction. What's the cause of that?
Well, we really need to see a boost in demand. After seeing strong exports in October, we've seen export demand really kind of trail off ever since then. And of course, wheat needs to stay somewhat competitive with corn because those traders are watching both of those markets. And with corn in decline, we're going to have a tough time getting wheat back higher.
Yeah, and I think you hit the nail on the head there with the competitiveness of wheat around the world. And when we look at the global situation, completely different than what it is domestically. USDA now increased, over a year ago by 4.3 million metric tons, the carryover situation globally. And I think when we look at it from that standpoint, we have plentiful supplies. And that means more competition for the U.S. on the export front and less potential demand, even though we do have the tight supply situation. What do you see from a global standpoint?
Well, especially that Canadian situation is something the market's dealing with right now, because after Stats Canada increased their number dramatically, we increased our Canadian production number dramatically in this week's report, and that's having a big impact because we know there's going to be bigger competition with our supplies from our northern competitor.
Right, so now we're talking about the wheat market and its inability or the struggles it has in terms of competitiveness and the export side of things. And I think we can kind of tie that into the corn market as well. We have both these markets sitting here, look very similar technically, struggling to put in lows. And on the corn side of things, USDA cut its domestic carryover number, cut it more than anticipated this month. But yet when we look at the number, it's much bigger, more than double of what it was coming out of the 2012-2013 marketing year. So where do we stand at there with the corn market and trying to build a base of support under the market?
Well, for the next couple of weeks, I think one of the things traders are going to be doing is evening their positions as they clear their books for the year. There's a possibility that wheat and corn could see a little boost because funds are net short those markets. So maybe that will help us a little bit. But like you said, supplies for corn are rebuilding, and even though demand is rebuilding, it has a rough row ahead of it.
Yeah, Julianne makes an excellent point there. We're starting to rebuild that demand base in the corn market. Could give us a little bit of price support, but more than likely the near-term price support is going to come from short covering or the taking of profits on short positions into the end of the year. That means the upside is probably limited for the corn market short term. For Julianne Johnston and all the Pro Farmer editors here in Cedar Falls, Iowa, I'm Brian Grady.
Attend a Pro Farmer Profit Briefing seminar near you. Visit www.profarmer.com for the latest seminar schedule.